everyone. I'm back with Bryan Clagett, my latest guest to Outlier Podcast. Hi, Bryan. You can see Bryan waving.
You can definitely see me. I can't. You can't hide from me.
No one can hide from you. No one on the fintech planet can hide from you. That is, ladies and gentlemen, Bryan Clagett for you. So, I mean, me and Bryan, we go like what long back at least. Now, I think now it's like a couple of years, right? We have exceeded the mark of a year of knowing each
It's
other.
going. Yeah. I mean, it's. I think we're just over 2 years now, right? Or coming up on 2 years.
Yeah, we should
It's
celebrate
it's
that
it's so
anniversary.
much. It's so much fun that time is just flying by. It's kind of like the election. It just went by like that.
I still remember the day when I first spoke with Bryan, like it was almost 2 years back. And since then, it has been a fun ride, right? I mean, with Bryan's always on mindset, always thinking about something, the next, what's innovation, what's new. That has kept our relationship growing even stronger. We think across the same lines. So, Bryan, I want to do a quick introduction about you. I know I definitely won't do justice because there's so much to cover. So, Bryan, in my 2 cents, who is Bryan? Obviously, he loves to talk. He'll talk about who he is, but still, I'll do introduction. So, Bryan Clagett is a fintech guru. He's a fintech guru, is a fintech influencer who, in my 2 cents, has a innate capability of understanding where the fintech is going. That's what excites me most about Bryan. He can marry worlds of financials, of FinServe and fintech together, and look at the broader picture. That's what Bryan. It makes Bryan so unique. So Bryan started his career long back in financial institutions, working for a bunch of banks, credit unions. To last, he was at GZO where he sold off his company to Jack Henry. Now Bryan is advisor to a group of very innovative fintechs. One among them is EXL. I work for EXL, so Bryan, that's the way how we know each other. Bryan is an advisor to EXL, and that, that's pretty much Bryan's introduction. Is Bryan is based out of Williamsburg, Virginia, a beautiful, small, amazing town that I love going every single time. Uh, Hi to Amy. That's Bryan's better half. I will send you this podcast. So Bryan has one daughter, one son, very talented folks. So Bryan, this is an introduction that I could do my best. I know you would want to add something to it if you want.
Yeah. I don't know if I want to add to it. For those that don't know me, I'm a former banker and a former credit unioner, if that's a term. I stumbled upon banking almost accidentally back in 1986 and worked for large regional banks. So I was involved in the M&A side, the marketing side, the communication side, eventually the product side. And in 2000 or 1996, I got a call from a headhunter about a credit union job. They were looking for someone to take over marketing. It was in New Jersey. I didn't know what a credit union was. They weren't even on my radar as a banker. And I took the call, got to know them a little bit, and it turned out to be AT&T's credit union. So my dad was a former AT&T executive, so I called him up. I'm like, Dad, what the hell is this credit union thing? He goes, I think they're just for the factory workers. I don't know if it's a place you want to go. I don't know if they can even pay you well. So anyway, I spoke with, I think it was either the COO or the CEO at the time, and came in for an interview and reluctantly took the job. And I was there for quite some time. Really enjoyed it. Got involved in the QSO world. Rolled out this thing back in the day called e-commerce, something that was very trivial back in the 90s. And honestly, had a blast. In 2004, I came down to Virginia. I started working with a ad agency and a branding firm here in Southeast Virginia called Ralston Partners, and really helped them build their financial services practice. So as coming from the banking world, now on the vendor side. And then by chance, I read an article in 2008 about a little startup called Gizio. It was in the Wall Street Journal. There was a guy in there named Sean Ward, And I'm reading this story. I'm like, yeah, this thing you've got, this Gizio, it's a financial management application. You're trying to do a B2C. I think you got to try and resell your services and white label them and then embed the solution within a native banking experience, either online, desktop, mobile, whatever you call it. And one thing led to another, and I got pretty deeply involved. They couldn't pay me a lot of money, and I ended up giving them quite a bit of money. But great organization, started by Pete Glyman and Sean Ward. And ultimately, we did sell it to Jack Henry after 10 long years and 540 clients. But it's been a blast. And at that point, I kind of retired, started doing some work with Strategy Core, again, working with community financial institutions. And since then, I've been focused on advisory work, some nonprofit work, and obviously working with the likes of EXL. And I'm having a blast. That's all that counts at the point that I'm at in life. Have fun.
That's great to hear, Brian.
And
So,
by the way, I got a shout out to Varsha. Varsha was an engineer at Movin, where I was doing some work, and she was
yeah,
based out of where? She's based in New Delhi. I always get it wrong.
in New Delhi, yes.
New Delhi. So she had said to Anurag, "Hey, this joker Clagett might know a thing or two about the banking ecosystem and bridging gaps in networks, etc." And that's how this little relationship started. And Anurag's been a great friend, and he and I have a lot of fun together, including these podcasts.
Absolutely. I mean, to everyone, I can go on recording and I can tell I owe a lot to this gentleman on the other side. I do owe a lot. It literally helped me understand the financial services ecosystem of this country. I was a newcomer. He helped me introduce me to the entire fintech ecosystem. Today I know a lot of people, but this
You're
person,
everywhere. You're everywhere. I mean, which is great. It's that's one of the things I really like, and I think that's one of the things you really like about working within the banking community. And it's very much a community. And I tell this to younger people and ambitious people, both on the fintech and banking side. Never burn your bridges in this industry. It's just don't treat the guy or gal down the street necessarily as hostile competition. There's a lot of cooperation, and I know credit unions like to emphasize the co-op side, but even in the community banking space, traditional community and commercial banks, retail banks, there's a ton of cooperation. Even in the neobank world, there's a lot of cooperation. That makes it fun.
absolutely, Brian. Now, we had like these conversations for hours over drinks, multiple times. But I want to ask you one specific question. I mean, I'm a strong believer and proponent of using data and AI for decisioning for community financial institutions because I believe in it. It's not like that's what I do for a living. I believe in it. You've been a strong proponent and supporter of the same. How do you think, Brian, that community financial institutions should use data for better decisioning and for better experience for an end consumer as a whole?
Well, I'll tell you, there are endless possibilities, but the problem it starts with the fact that the banking industry as a whole and banking is so commoditized that I think financial institutions have been relatively lazy when it comes to putting data to work. As a guy I used to work with when I was VP of marketing at Affinity Federal Credit Union in the 90s, his name was Kurt Snyder. He's now at Correlation. Guy's 70 years old and still working. Great guy. He once said to me when I was running the marketing there, he's like, "Kurt, I need more data." And he goes, "Brian, you don't need more data. What you need is information. What information do you want?" And that has stuck with me now for over 25 years. The data is vast. There are so many sources of data. The financial institutions need to ask themselves, what do they want data to tell them? What information or insights can they garnish? And how do you put those insights to work? I still think there's too much emphasis on account level servicing or account relationships as opposed to, household relationships, especially as the world gets more diverse. And the opportunities from a household perspective to me are much more vast. Financial institutions can find a way to put data to work, and not just from a marketing perspective. As you alluded, there's a servicing aspect as well. The financial institution that I think today is the best model for that, and some of the listeners aren't going to like me for saying this, but it's Chase. I think Chase does a great job of leveraging that online experience as well as that in-branch experience. Some will call it omni-channel. I think that's a term that's overused, but it's just logical from a consumer perspective. Data tells a story. My bank, my old bank, did a really bad job with data. I was with them 20 years when I moved here to Virginia, and they would constantly send me offers for products and services I already had. When the transaction with Gizio was completed, there was a large wire that went to my checking account. That was at the time the most convenient thing to do. And one of the first messages I got out of my bank, I almost said who it was, $25 billion bank. The first thing that they did was send me an email asking if I was considering retirement and whether or not I needed to build a retirement plan. They're acting as if I was a 35-year-old, not almost a 60-year-old person at the time. Yeah. And they quickly followed up suggesting that I start putting money away for a 529 plan for my kids. Well, at the time, my kids were in their 20s and had been banking at the same bank since 2004. Right? I mean, just idiotic. And by the way, that was the straw that broke the camel's back. That was the day I started shopping for another financial institution. Another example of data not being used. Years ago, I needed to buy a pickup truck to tow a boat. A car wouldn't do it, so I had to buy a pickup truck. And I went to a GMC dealer, and they said, hey, you know what? We have a great program. If you're a cash buyer especially, I can get $500 extra in your pocket today, or $500 rather, savings today. All you have to do is go down to First Advantage Federal Credit Union down the street, open an account. It's a $25 minimum deposit, and I'll cut you $500 right off the price. I'm like, man, that's fantastic. So I went down there, I did it. No attempt to upsell, nothing whatsoever. No attempt at gathering data about the vehicle I was buying, what I was doing, nothing about the lifestyle I was leading. No intel attempt whatsoever. After I opened the account, for years and years and years, there was never an attempt to build a relationship. Then one day, I got an email, or maybe it was a letter, indicating that my account had been closed and I had pretty much a zero balance at that point. They feed me. At no point did they try to upsell me or anything. So again, these are examples of data. And the problem is, again, the data is there. They have the data. They just don't know what they want from it. So I tell everyone that's looking to put data to use, what's the story you want it to tell? How do you plan to use it? And then you can address where do you gather it, where do you store it, how do you leverage it, etc. It starts with strategy. And I don't think the average financial institution has a real strong data strategy.
That's a problem, Brian. I mean, the second problem which you allured on is how do you actually convert an indirect member to a direct member? That's a huge, huge problem to solve for. An average credit union now has 25% of the member base is indirect. If someone can solve that problem, that's a $1 billion incentive, right? I mean, if you can go and solve the problem. But can't you? You can. It's again using data, using the right data for right decision, right? I mean, a simple data trigger like a birthday wish from a credit union that can go long way for indirect members. Same, Brian. I mean, I'm a credit union member, a couple of them. I haven't been an indirect member, I'm a direct member. But a few friends of mine experienced exactly the same thing. And these are reputed credit unions, right? It's nothing about feeling bad or great, but this is what the current situation is. What can we do? So this is great, Brian. Talking about data and AI, right? I know you're one of the very few people, Brian, whom I come to talk about the future of fintech. I mean, there was a time when it was all bitcoins. It was all blockchains. No, not bitcoins is the wrong word. Blockchains. It was all blockchains. Now it's all generative AI. I mean, but people don't talk about basics. People don't talk about solving basic problems like these. But it's a lot of vapor around, and there's a lot of funding that's going on across the entire world. It's not only just North America, Asia, Europe. There's a lot of funding with buzzwords, if I may call. So if you're talking about, Brian, a fintech of tomorrow, what do you think is legit and what do you think is vapor, right? Let's debunk a few myths today.
Well, I'm not going to talk about banking as a service. Let's start with that. That's just it's an ugly subject. And I'm not going to talk about the regulatory environment, which I do expect will change a little in light of the election. I don't know if I or anyone knows what the future of fintech looks like, nor do they necessarily know what the future of banking looks like. From my point of view, the bank of the future or the fintech of the future, if it was direct to consumer, is one that I don't have to think about as a consumer, as a business. They anticipate my need, they reduce friction, they make it easy, whether it's a payment solution or it's, the transactional analysis and the data and insights that come from, banking or credit card related transactions. The fintechs that excite me the most, because I don't think banks are going to go anywhere. I mean, I think there will be fewer banks and the bank of the future will look a little differently. But I think the fintechs that excite me the most as I look forward are the ones that find solutions that are embedded within, I hate to use the term ecosystem, but a banking ecosystem, right? Because consumers have their own banking ecosystem.
Yeah.
My banking ecosystem consists of my bank, where I process transactions, paychecks come in, dividend checks come in. It's where I spend from. And the same bank, in this case is Chase, I have my credit cards. I have a business credit card and I have my personal credit card, which is a Marriott's card for travel, or an American Airlines card. I even have one for Delta. I kind of partition my spending. I would love, as a consumer, to be able to bring that all together into a manageable dashboard that makes reconciliation, taxes easier for me as a person, not to mention the business side. But there are fintechs out there that are working on this aggregation, if it were, of not just the data, but of the transactional feed. I'm still using Quicken and QuickBooks. And it's a cloud-based version. I do have some concerns about security from time to time. For example, just about every time I open the computer, I want to make sure I'm on my own private relay. I never do my banking in a public through a public Wi-Fi system. Ever. Regardless, right? I just never do it because everything's on my laptop. The reason I store everything on my laptop is because I need to make it easy for me when I pay my taxes. I give a file, I run a report, and I give a file to my tax accountant, and I just give it to them, and off they go. But the bank of the future is going to be the bank that reduces friction and that I don't have to think about. Payment technologies are exciting to me. Where we're going to go with crypto, I don't know. Crypto's legit. I mean, I've always been a big believer in the foundational aspect of crypto, which is blockchain and what it can do, kind of behind the scene. But my advice to a bank or a credit union is, until you get your data story straight and you figure out what you're going to do with data to improve the service and the share of wallet that you need from the households you serve, I wouldn't be looking at crypto. Not yet. But there's so many fintechs out there that have different kind of pitches, and I see them all the time. I like the ones that are going to help banks grow, not only share a wallet, but new relationships that they don't have today. There are a lot of financial institutions that are not speaking to people your age or people the age of my daughter Sarah. Sarah's a recruit. She's a recruiter at. She was at Ripple. Now she's at Coinbase. I mean, we're talking some serious technology there and some serious incomes of the people she's recruiting for. These people aren't banking at your average financial institution anymore. And if they are, it's only on the transactional side. They're storing their wealth or building their wealth elsewhere. They're looking at fractional real estate investment trusts. They're looking at crypto. They're looking at what we call alts, which could include NFTs and other things. They are way beyond the savers that my mother and my father were as post-depression people, and certainly beyond where I even think. They look at their bank as, like Ron Shevlin would say, it's this paycheck motel. Money goes in, then the money goes out. They either spend it, pay off credit card debt, etc., or they're putting their real money elsewhere where it makes good money. My son, when his money comes into the local bank, he just partitions it out, pays his bill, whatever's left over goes to a Capital One savings account or to a Raymond James or something like that. And there are a lot of people out there in their 20s that think about money a lot differently. The other thing I would say about data that I think is important, we all have somewhat different relationships with money. Bankers need to figure out what is the relationship that the households they serve have with money. Whether they have a lot or they have a little, there's a relationship with money.
Absolutely, Brian. This was so on the point, right? I want to just end this podcast in the interest of your time with one last question. I mean, I don't know if you saw the news yet. The Fed just cut their rates another quarter points, right? Just 20, half an hour back. Now, the equilibrium is changing. Lending will become soft. Where do you think is an average financial institution is heading to? What should be the focus for an average financial institution in 2025?
From a lending perspective specifically or overall?
Overall, I mean, we spoke a lot about data. Right? At the end of the day, a bank or credit union has to run their business. Right?
Yeah.
Data is important, but there are some core businesses, deposits, assets, liabilities, right? So, where do you think? What is your advice for an average credit union or a community bank? What should be the priorities for next year, and how should next year look like?
Well, I mean, I think there's some pent-up demand for durable goods, right? I think that, if you talk to auto lenders right now, or not auto lenders, but auto manufacturers, the lots are full, right? During COVID, we didn't have a lot of supply. But if you go to a Ford or GMC dealer or a BMW dealer right now, and I'm always car shopping because I'm a car guy, the lots are full. Consumers are going to start buying cars again and washers and dryers as soon as consumer confidence comes back post-election. I don't think that's going to be immediate. I think that the bankers, and that includes the credit unioners as well, need to be thinking again more strategically about how can they be relevant to the people they serve. Again, those households. The competition now is much more vast than when I started my career. Even when you started your career, it's become more vast, right? I mean, it's dog eat dog out there. You can't compete just on rate, especially as the rates start coming down. That'll be difficult to do. I think you're going to need to think about diversity of products and services a little more aggressively. You're going to have to look at conceivably reinventing your product menu per se. But probably the most important thing a financial institution needs to do in 2025 and beyond is be there in time of need and anticipate need for the consumers and households they serve. If they can do that and they can put the right product in the hands of the right consumer, household, or member at the right time, they're going to have a higher chance of success. But if they just play the competitive rate game on its own, there's only so much that they can do to grow.
Absolutely, Brian. I think strongly with you, right? There has to be a differentiator, one. Second, it cannot be a selling machine. You have to preempt the need of an average consumer. You have to understand what an average American wants.
Yeah.
How do you go and save for the first mortgage? How do
Yeah.
you introduce innovative product like fractional real estate? We were talking yesterday, right?
Yeah.
You have to, firstly, I don't like the term checking account. It's no more checking. So it should be spending account. How do you go and
Yeah,
manage spending?
my son will say checks are stupid. And frankly, they're just fraught with fraud. I mean, Jesus, I hate writing a check. When my wife and I fight over it, I get mad when she writes a check.
And
She gets mad at me for other reasons, but that's okay.
But Brian, this was an amazing conversation. Obviously, when both of us chatted, this can go for hours. But in respect of this format of the podcast, this was great, Brian. Again, thank you for joining us in the episode of the Outlier Podcast. It was fantastic having you. Thank you.
I have lots of people you ought to be talking to. There are a lot of outliers out there you need to be talking
Oh,
to.
yes.
Always a
Not just
pleasure, my man. I do appreciate it.
Absolutely, Brian. Thank you.